Thank you very much, and welcome to our Fireside chat with the title Bitcoin Spot ETFs, Challenges, Outlook and Impact on Bitcoin Cycle. My name is Sven, Editor-in-Chief at BTC-Echo, and I'm now looking forward to Steve Kurz, the Global Head of Asset Management at Galaxy. Most people here will be familiar with Galaxy as it is one of the biggest diversified institutional players in the crypto space and definitely a heavyweight in the industry. So in the next 20 minutes, we will be able to gain valuable insights from him as he was closely involved in the launch of the Bitcoin spot ETFs in the US. And furthermore, he's also developing other markets for digital asset products, such as here in Germany, together with the asset manager DWS. So great to have you here, Steve. How are you? Because you just landed here in Frankfurt from New York, so you have a little jet lag, I guess, huh?
Well, I have a 2-year-old and a 4-year-old, so every night is jet lag, so nothing has changed.
Okay, great. So enough energy saved for my questions.
I hope so. We'll see.
Okay,
if they're good questions.
Yeah, I think they are good, yeah. So let's start straight in, and I would like to know more about the sentiment on Wall Street. I mean, there are some people left, like, for example, Jamie Dimon, who is a little bit critical about Bitcoin. And I would like, is this critical attitude towards Bitcoin, is it still dominant, or is it just like not the case, like Jamie Dimon is an exception?
So at least in the US, we're 15 years into the banks treating the government like a client. And so what that means in the context of Bitcoin is that at best, until the government is a certain way publicly about Bitcoin and other crypto assets, there's going to be a measured response. Obviously, there's outliers like Jamie Dimon. I think with the ETFs, the game has changed. I think the much more important thing to do is to watch what they do and not what they say. So if you look at the ETFs and the underlying architecture of the ETFs, Goldman and JP Morgan are very active participants as authorized participants. This playbook for banks, while they still can't touch spot crypto in the US, even if they wanted to, there is a way to play the space now. There's financing, there's going to be options on the ETFs, there's being an authorized participant, which is happening at basically every bank, and then soon to be not just listing on the wealth side of the bank's platforms, but also soliciting Bitcoin and actually having that be part of the overall portfolio allocation. There are notable examples. Goldman Sachs' head of research on the wealth side is one, Jamie Dimon is another, but I think that those are minority views, and I think underneath the hood you have teams that are working on those today initiatives, and then the tomorrow initiatives are well understood, right? Whether it's tokenization or trading or lending, that's what's next.
Even we saw major inflows in the Bitcoin ETFs. It was a huge success, I guess, but I ask myself, isn't it just the retail money? Like some hedge funds, maybe yes, but not the institutional players we are waiting for. They are still on the sideline.
Yeah. The American analogy would be we're in the second inning. It's a baseball analogy. So we're still very early. And what's super impressive about the flows, over 12 billion of net flows into the ETFs just in 3 or 4 months. In fact, over 4% of all Bitcoin are already owned by the collective 9 ETFs in the US. Is that the real wealth centers, right? On the wealth side, it's a $48 trillion market in the US. There's RIAs and bank platforms. None of those, 95% of them, have not actually moved from having these accessible to actually selling those. So that move into solicitation of Bitcoin versus warehousing Bitcoin ETFs is going to be dramatic. It's going to happen in the second and third quarter of this year, and that's going to be a real unlock for institutional wealth dollars. And then on the institution allocator side, that really is an even much bigger market. It's $100 trillion plus globally. That's more of a third quarter, fourth quarter story. I think you need Bitcoin to become a little less boring. So all of this hype, even around the ETF, it's a little too much for them. But when they see the BlackRock fund, 25 billion or whatever it becomes, I think it'd be an easier entry point for those institutional allocators. And in a year, I think you'll be very surprised by the overall collective AUM of those Bitcoin funds relative to today.
And do you think that the narrative of digital gold will also be reflected in the investor's portfolio, meaning that the percentage of gold of the portfolio will be reduced in favor for Bitcoin? So we are seeing like gold bugs switching to Bitcoin. Is it like something that is really happening?
I think that's possible, but I think it's downstream of the bigger point. What you've seen, we're in an interesting inflection point in macro where there's been a breakdown of correlations. The dollar is stronger, but gold and silver have also broken out while Bitcoin's acting like a risk asset. So it's a little unclear now. But if I had to guess, I think that this deficit story, remember a lot of the US debt hasn't rolled to 5%. So the replacement costs of US debt results in a significant $1.7 trillion of debt service is the normalized cost of dollar funding our own debt. I think that that's going to be a much bigger narrative, and I think real assets, whether they're even stocks, frankly, but real estate, gold, silver, and Bitcoin. So I actually think that tide will lift all boats. I think gold is higher, and Bitcoin will be the fastest horse in that monetary inflation story that's going to really start to pick up in the next 3-6 months.
And do you think that especially Bitcoin ETFs, have already changed the dynamics of the crypto market? Because we use now an old infrastructure like with T+2 settlement, public holidays. So it's very slowly everything. So do you think that we see a kind of spillover effect on the crypto market, that the trading times are different, for example?
So first of all, I'm not a believer that this will reduce the liquidity of the Bitcoin market. I think it will absolutely, over time, increase the underlying market. It's true we've never had an ETF wrapper on top of a hyper-liquid asset like Bitcoin, but in every instance, the two, and certainly when we have in-kind creation and redemption as a feature, which we do have in Europe with our DWS funds, but not yet in the US, that will exacerbate that in a good way for the liquidity of Bitcoin. But more importantly, you need crypto wrapped in traditional structures as part of this long march towards an on-chain tokenized world. So a lot of crypto people don't like that Bitcoin's wrapped in a traditional structure. Maybe they also don't like that the euro is being wrapped in a crypto structure, but those two things both need to happen for there to be the singularity of digital rails and the markets and the assets and the asset classes coming together the way we think they will. So I think it's not a negative, it's a dynamic. You have to pay attention to the Bitcoin ETFs if you're trading Bitcoin, because it matters, and the weekends are interesting these last few weeks, but in the long run, it's very important and significant for Bitcoin.
Okay, and you helped Invesco launching the Bitcoin Spot ETF, and I would like to know, what was the biggest challenge from your perspective, or what caused you the biggest headache, maybe, doing so?
Well, the 10-year approval process was challenging, for sure. No, seriously, the regulatory dynamic was the most difficult. As recently as a month before the launch of the ETFs, there's a question of, are we going to have in-kind and cash? And fortunately, and Paul Capelli's in the room, and he's been running our CI Canada funds for years, so we had both models ready to go. We had the cash create ready to go. We had the infrastructure, but it was really unclear, even in the weeks leading up to the Bitcoin ETF, what is this thing going to look like functionally? And so there was this sense of, and I think we were the most prepared because we had the large issuer and Galaxy, just like we have with DWS in Europe. I know some of the other issuers were very nervous because they've never had a situation where you don't know when it's launching, you don't know how it's launching, and frankly, you don't know who's going to be charging what. This fee war was very interesting and unprecedented. So all of those dynamics were difficult. Obviously, as we're going to market with large partners, as a crypto company, that's a mission-driven labor of love, really learning to integrate the workflows and work together as a team across the companies is something that you have to work at and learn how to do, but overall very rewarding.
Great. So the insecurity paid off.
Anger, fear, all of the various emotions were there for sure. Yeah.
That's great. But you're not only focusing on the US, also European market is important for you. Like you launched this month with DWS 2 crypto ETCs, and you have also other projects with DWS. So please tell me more about the European market strategy from Galaxy.
Well, so Galaxy is we're a platypus. We're a Cayman company that's public in Canada, that's headquartered in New York, and that operates globally. This is what you have to do when you're in crypto if you really want to have a large footprint. And so we've spent years being regulated and figuring out how to do what. And Europe has always been a real sweet spot where we thought the regulatory frameworks, the openness to innovation, and the ability to, if you can crack the code, and there's different jurisdictions, there's real value to being here strategically. I think one of the reasons that the crypto adoption statistics in Europe lag some of the other jurisdictions is because you haven't had partnerships like ours with DWS, where you're actually leading on stablecoins and you're leading on ETPs. And so I think the next 3 or 4 years, I don't want to say catch up because that's not right. There's a lot of innovation. There's always been innovation in Germany and Switzerland and France. ETH Lisbon's a huge, these centers of activity have been very, very important to the crypto ecosystem. But in terms of moving that forward and bringing the regulatory piece along and then expanding the adoption surface space, what we're doing with DWS is just the beginning, and we think it's part of a much bigger picture for Europe that will ultimately include the UK, which we think is next. And as a company, we operate all of our businesses, including banking, trading, and infrastructure across Europe, not just in the US. So very, very excited about the next few years.
Great. And when we're already talking about different regions, this week we had the major news of Hong Kong, that Bitcoin and Ether ETFs received the approval there. And I would just like to know, is it a big deal now in Hong Kong or not really? What do you think?
It's a debate. The ETF, the classic ETF, you would say the Hong Kong markets are not big from a public funds perspective. The counter to that is it's very clear as of the last few years that China has given at least tacit approval, and you've seen this with Hong Kong opening up again for crypto, to the industry. The underlying, what it seems like is going on under the hood is that these Hong Kong issuers, while they're small and while the market is classically small, may actually tap into much bigger demand on mainland for these products, specifically for a Bitcoin ETF. So I think it could be. We have to stay tuned. It would be unprecedented, but it's possible, given the posture of the CCP around Bitcoin and the desire for China to grow and not reject crypto categorically. And then I think it's just another, at some point, when you talk about Wall Street, right, it almost doesn't matter, right? You have US ETFs, you have European ETPs, Brazil and Canada have ETPs, Southeast Asia has ETPs. This is not so scary.
But in the end, it was the US market. Or in the end, no one cared about the European products we saw, about US. That was a major deal, and now everything has changed.
It's funny. It's funny that how that works. I mean, I do think that the theatrics of it, right? The theatrics of 9 issuers going at once was unusual. I also think it's impossible, and this is a little bit of U.S. politics, but Larry Fink is in the circles of the Democratic establishment in D.C. and post-SBF and post-FTX, that was really the nut that needed to be cracked. It was really the moderate Democrats had taken so much money from Sam Bankman-Fried that they were neutralized. The extreme Democrats didn't like crypto, and you really needed a strong Democrat commercial voice like Larry Fink to step up and really say Bitcoin is okay, tokenization is part of the future, this space isn't categorically bad, and it was really impactful for the crypto markets.
There is not only Bitcoin. Many people here in this room questioning themselves if there will be an Ether ETF maybe this year coming. We're all waiting for the Ether ETF. What's your assessment? I mean, you don't kind of look into the future, of course, but do you think we will see an Ether ETF this year or not?
So one of the positives of the U.S. is that, when we can go big and we can make an impact with the Bitcoin ETF. One of the negatives of the U.S. is that we have a horrific approach to regulation. We have 17 regulators. They always fight each other. They never agree on anything. This is unfortunately becoming that. Ethereum is caught between the CFTC and the SEC right now. You've seen in a proxy battle different court cases. The CFTC is saying Ethereum is not a security. The SEC is posturing, even though Gary Gensler has said it's not a security, that it is now a security. And so there's just this very muddy debate. What we think is happening is Gary Gensler, in spite of having been forced to do the Bitcoin ETF because he lost a court case, he got a lot of political blowback. It's an election year. I think there's just a cooling down that's trying to happen here and to slow this down. And so we are less optimistic about the US Ethereum ETF this year. It's possible, but it's certainly not as excited as it was in January. We are excited about XETH, the Xtrackers Ethereum product. I think there's a chance for Europe and Asia products to really get in front of the Ethereum story, and maybe the US will catch up.
Now I would like to talk about the Bitcoin cycle. And there's a theory out there, like the left translated cycle, that the Bitcoin spot ETFs triggered due to the supply-demand context, like the effects of the halving already. Like, what's your idea on this? Do you think that we see a different kind of cycle this time because of the ETFs?
Well, for sure that's true. Every cycle is different. I think the Bitcoin story today has 3 legs of the stool. There's the fundamental story, which is really halving driven. There's the macro story, which is somewhere between deficit and rates driven. And then, of course, there's the adoption story. So has some of the demand been pulled forward? Yes, of course. In 2016, I think it was 245% of forward one-year return for Bitcoin. In 2020, it was more like 500%. So everyone has these very big expectations. Bitcoin, it's the law of large numbers. It's hard to go that much higher when you get to be $1 trillion asset. That said, what people are missing about this time, people understanding the halving is foundational to understanding Bitcoin's value. Because of these ETFs and because of the DWS products and all of these ETPs globally, there will never be more eyeballs, or there have never been more eyeballs on what the halving is and what it means to be a scarce asset, particularly in this macro environment. So I think as that story percolates to a much wider adoption market, you will have a higher Bitcoin price 1 year forward, but that doesn't mean that you haven't had some of that already pulled forward. So I think it's a little bit of both. I don't think it's either or, and I think it'll be volatile along the way. But if we're sitting here in a year, Bitcoin's higher.
Okay, so we are not reaching the end, but coming close to the end. So finally, would you like to give us a very brief outlook maybe about the things that are important for you this year, where you think, wow, that's something we have to focus on, or the sector in which kind of direction will develop? Like, give us an outlook, please.
Sure. So the business that we spend most of our time on is well, at least for me, is the asset management business at Galaxy, and we're a $10 billion AUM business. I believe with the ETFs and with the equity products and the broader toolkit globally, we are at the beginning of a crypto asset management renaissance. And I think that's going to be an on-chain and an off-chain dynamic. I think that in 3 to 5 years, we're going to have an industry that's no longer 50 to 100 billion, which is really a cottage industry. I think it's going to become, you know, a $500-600 billion asset management industry that creates this idea of crypto as an asset class, not in a sexy way, but in a layered way, and in a way that combines traditional structures with crypto structures, and ultimately crypto assets with traditional assets. And so that's what we're very focused on, and part of that is tokenization and the on-chain asset management stuff that was discussed earlier, and part of that is the market cap growth of crypto. If, again, in 1 year forward, we're around $2 trillion in market cap today, I do think that within 12 to 24 months, that's at least double. When you look at the energy that's going into these ETFs, that's going into the tokenization products in the US, it is a freight train. It's not slowing down. There will be volatility, but that's all noise, and we're going to be much higher from a market cap perspective, which is the raw material for the asset class to really grow.
I think that's a great outlook, a very positive one. That's awesome. And
I'm biased, but you know,
we're all biased. I think
well, but 7 years into doing this, if you ignore all the noise in FTX and the messes being cleaned up, and you just start with a clean sheet of paper without any history and just write down the things that have happened and said, is this a part of the future? It's really hard, intellectually, honestly, to not say yes, or at least some version of yes. That is so different than where we were when we started this journey in 2017.
Thank you for your exciting insights. I think we all could learn a lot from you. It was great. Thank you very much.
Thank you so much. Appreciate it. Thanks.